This is Real Estate Rookie, episode 167.
Just do it, and perhaps before doing it, just really sit down and write down that goal. Like, what do you want to do? If you're considering real estate investing, really write down what you want to do and have that goal drive you. So as Stephen Covey puts it in the 7 Habits of Highly Effective People, begin with the end in mind. And if you haven't done that yet, I would highly encourage sitting down, thinking about it, writing it down. And actually, I know you said actionable, but I think that is writing the goal down is action. I think it would drive a lot more, actions and things coming out of that.
My name is Ashley Kerr, and I am here with my co-host, Tony Robinson.
And welcome to the Real Estate Rookie Podcast, where every week, twice a week, we bring you the inspiration, information, education to get started or keep going in your journey as a new real estate investor. So, Ashley Kerr, what's going on? What's new in your world?
Well, I think we should talk about how me and you got to hang out, because that's always an exciting and fun time when we get to see each other in person and not on Zoom.
And this one was actually for a really good cause. So last year at BPCon, all the hosts for the podcast, they decided to offer up different things for a charity, and I think it was called a Hero's Home. Yeah. Right.
Yep.
So it was a charity that benefited veterans. And what Ash and I decided that we'd offer up is whoever won us got to spend an entire day with us. We're going to fly out to whatever part of the country they were in. And this past Tuesday, Ash and I got to hang out with Susan Rehill and spend a day in Tacoma, kind of walking around some of her properties, and then just really getting to know her and kind of hopefully giving her some value on her journey as a new investor.
Yeah. So Tony and I have both actually met Susan before. She was in 2 of the rookie boot camps. And then we also met her at the BiggerPockets conference and also at an event in Seattle. I met her another time too. So it was awesome to get to hang out with her again and to see the first investment property that she purchased. And we got to walk through it while I was in the middle of rehab. We actually brought with us our friend Serena from Fixated Real Estate, and she took Susan through the property and said, in this, just because she was familiar with the Tacoma area, and gave her some tips and pointers on things she could do to really increase the value, but also to save money. So that was awesome. Thank you so much to Serena for doing that with us. And we got to have breakfast. We got to go out to eat. Who doesn't love eating? And then
there
we
was
also
some mimosas, some Bloody Marys.
Yeah. We also got to tour some of the properties that Fixated Real Estate is doing too, to also show Susan other projects that are going on in the area. So hopefully she took a lot of value from it. And I think Tony and I actually learned a bunch of things too, getting to hang out. Yeah. So it was definitely a great day and lots of fun.
Yeah. Well, we've got a great episode lined up for today as well, right, Ashley? This was a fantastic episode. I think really, really crucial listen for anyone that's a new investor that's looking to invest out of state. Our guest today was Hashim Ismail. He's based in SoCal, not too far from where I'm at, but he's actually investing in Memphis. So you get to hear his story about how he built his team, how he leveraged BiggerPockets, how he renovated and rehabbed from afar. And he's been able to complete 7 deals. So he's got 7 units done in only 11 months. Amazing. Crazy story.
And he tells you exactly what kind of financing he used to be able to do this, how he could grow and scale so quickly within that short amount of time, but also building a team out of state and leveraging the BiggerPockets forums to do so. I had Hashim in one of my boot camps, and he talks a little bit about Tyler Madden, who was a TA in one of the boot camps, and just finding a mentor that can provide value to him. And then he talks about a couple other mentors and goes on to thank a couple people at the end of the episode, which I think was really awesome. I don't think we've ever had anyone actually do that before. So that was really nice.
Hashim, welcome to the Real Estate Rookie Podcast, brother. We're super excited to have you. And man, why don't you start off by telling us a little bit about your story, your background, kind of who you are, and how you got started in real estate investing.
Yeah, thank you, Tony. Thanks, Ashley. I'm excited and humbled by the opportunity to be here. I listened to a lot of you guys' show, and I'm excited. I'll say I'm a dreamer. I'm a lifelong learner. I'm an optimist, and I'm a catalyst. But I have a daytime job, and I work in the life science industry. And my background is engineering and science, and I've done different things in the industry. And currently I do business development and sales. That's my W-2. And then about 11 months or so ago, I happened on and discovered a passion for real estate investing. And I also do that as well.
You said how many months ago?
About 11 months, going on a year now. Last April 2021, yeah.
Okay. And just really quick, if you can set the table, Hashim. So in those 11 months, how many transactions, deals have you done? What does your portfolio look like today, 11 months later?
So currently I have 7, and there's another one that I'm working on in a different market right now. So 7 to 8.
Awesome. Well, congratulations. I mean, that's great momentum. So let's start with that first purchase. I mean, did you get stuck in any analysis paralysis? Did you just jump and dive right in?
Very good question. I was in somewhat of analysis paralysis for, I want to say, maybe 2 years prior to that. So I was listening to the OG podcast prior, and then the Rookie podcast, and, reading books. But it was hard to actually take that first step. And there's all this information, and it's a matter of, okay, how do I actually do it? And then finally, I put a goal for myself, end of 2020, and then 2021, I decided to pull the trigger. And one of the things that I actually leveraged was, the networking piece and using the BiggerPockets forum. I was like, let me start. And then I went to the forums and started looking for people I can talk to, and started connecting and talking to people in different markets. And that's how it all started.
I definitely want to touch on that, on how you use the BiggerPockets forums and leverage that. But before we do that, let's talk a little bit about, you set a goal for yourself. Can you tell us what that goal was specifically, and then how you held yourself accountable? Did you have action items that you created to reach your goal? So
every year I try around December, and sometimes it goes into January, to set goals for myself for the coming year. So I put 2020 and December of 2020, I remember I put different goals for myself, and one of them was around real estate investing. And by then, obviously, I hadn't done anything. But that's a good point, Ashley, because I normally use goals and I write it down to push me to do things outside of my comfort zone and things that I haven't done before. At the time when I wrote it down, I didn't have everything mapped out as to how I'm going to do it, but I wrote it down, and I was going to push myself and use it as a form of accountability to get it done. Obviously I had some ideas because I've been listening to the podcast, reading the books, and I had ideas. And so I used the goal to drive me to start executing and hold myself accountable.
Then for the forums, how did you take advantage of them? I'm very curious as to what really worked for you, because, you can go into the forums, you can ask questions, get great responses. You can go through and read through other people's questions, but you said you used it to network. Yeah, so what I did, and I know there's another tool on the platform that you can actually network, and you can apply different filters, which is really cool. So I've used that, but at the forums, what I do is I actually put in keywords for what I'm looking for. So for example, when I was just starting, I had a couple of markets in mind, and I would type those keywords, and then a whole lot of information around that market would come up, which is good because some of it helps me understand the market at a very high level, a different perspective. And some of it is me meeting those people that, hey, an investor from so-and-so market, or a contractor from so-and-so market, or a broker or real estate agent from so-and-so market. So I start, figuring out who I want to reach out to, write their information down, start connecting with them, sending them messages, and then get on the phone and, talk to people who's available or who's willing to talk.
So Hashim, a couple of follow-up questions there. First, I love your use of the BiggerPockets forums. And honestly, that echoes a lot of kind of what my situation was like when I first got started as well. It's like the markets that I was interested in, I was just kind of searching through the forums to see who I could connect with in those markets. But I want to talk a little bit about where you are. So what city are you in? And then what city or state are your investments in?
Yeah, so I live in Southern California, similar to you, Tony, specifically San Diego. And I actually invest out of state. I invest in Memphis, Tennessee.
Gotcha. Okay. So, so many people who are listening, they're going to be in a similar situation where, maybe they live in an expensive market like San Diego, and they want to kind of make their dollars stretch, so that they're going to go out of state. So when you went into the forums, who did you kind of start looking for first? Like, was there, hey, I want to find an agent first, or hey, I want to find a lender first? So who were you looking for first? And then as you were reaching out to those folks, what was your pitch? Like, how were you kind of breaking the ice and opening up that dialogue with those folks?
So when I was just starting, Tony, I didn't have, so I knew in my mind I needed to find a team. And that means, somebody reliable as far as, general contractor, ideally, and a realtor or broker. And then some form, some way, either a realtor or broker, or some way to get, deals, and then some way to understand the market. So when I was just starting, I didn't have it all mapped out as to who is priority. But what I was going after was a certain persona and profile of people that I wanted to connect with. And part of that was also actually investors in the local market, to see what they can share with me. If is anything I can learn from them going into the market, if it's even a good idea from their experience, what their take on the market is. So anything. So the markets I was interested in, when I type, people that are, investors, brokers, real estate agents, general contractors, all of those I started pulling and reaching out. And that's a good point, Tony, you bring up around that initial reach out. These people don't know me. I don't know them. And the way I approached it was more around the networking piece, and then helping each other. And that's how I phrase it. And it's true in, business for me, even in on the W-2 side of things. I network with a lot of people. I reach out to a lot of people. And part of it is, can we find ways that we could possibly, help each other out? Obviously, at the time, I needed more help from them, but, there could be other ways possibly that I could give in return. I didn't know what that would be. Depends on the person, what they're looking for. But if there is a way we can, I can help them in return, or I can add value to them, that's always something, I have in mind as I'm talking and reaching out to folks.
So do you put that in like your first message that, you're willing to provide value to them? There's that book, Blue Fishing by Steve Sims, where he kind of preaches that you provide value by giving somebody what they need before they even know they need it, or something that they want before they even know that they want it. So are you going in and messaging someone and saying, hey, I could do this for you? Or are you just saying in general, let me know what you need and I can help you?
So what I do is when I was just starting and reaching out, just because I was not experienced in real estate market, in real estate investing at all, I would give a little, and I would keep it brief because I don't want to, bore people. But when I reach, I keep it brief, what I'm looking for. And then I give them a little bit about my background. Hey, this is the industry I'm in. I've been in this industry. And by the time I've been in the industry for a while, and I've done different things. And I'm decently connected in my industry. So I offer that if you need anything, within that, I'm happy to help, whether you or somebody else that you know. And that's almost like a hook. If they have a need, I'm genuinely, happy to help. And if not, at least they can possibly see that, I want this to be mutually beneficial. And if not, at least we got to network and connect. And that's kind of how I leave it.
Yeah, I just want to share one story because this is like real life for me. So a lot of you guys know I got my first deal back in October of 2019, right? Like that was my very first real estate deal. And around that time, I knew that I wanted to get into apartment syndication. Like that was my goal when I first started, is I wanted to just kind of, learn the ropes of real estate with a couple single family transactions. But my goal was to graduate into apartment syndication. And apartment syndication is like a much bigger ordeal than regular single family investing, from the money raising to the syndication creation to the property management. Like there's a lot that goes into it. So I knew that I wanted someone that could kind of teach me the ropes. And there was a guy on BiggerPockets. I literally logged into my BiggerPockets profile, and I'm looking at the message that I sent him 2 years ago. And he had posted on BiggerPockets that he was writing a book, and he was looking for feedback on the first chapter of his book or something like that. So I saw that, jumped on the survey, read the book, gave him some feedback, and then I shot him a separate message. And I said, hey, my name's Tony Robinson. I just finished your survey on your book, and et cetera, et cetera. But I said, hey, I think I might be able to provide some value to you as you work to launch the book. I worked in digital marketing for several years while I was in college, and I have a pretty good handle on Facebook ads and so on and so on. So I pitched this guy on saying, hey, I'll help you market your book for free if you, in exchange, give me some guidance on the syndication piece. And his response back to me was, Tony, yes, Facebook marketing will be of value to me. And then he connected me with his assistant. I did some work for him. You know, we never did a deal together or anything, but it just proves that if you can find a way, I hadn't even done a deal yet, right? This was before I'd even done my first deal, but I still found a way to provide value to this other super experienced investor. So for all of you that are listening, I guarantee that you have some skill, ability, capacity, even if it's just time, even if you're just offering time to do the task that this other investor doesn't want to do, you are going to be able to provide value to that person. If someone came to me and said, Tony, I'll come to your house and sort the big stack of mail that's piled up in the corner of your office in exchange for the short-term rental like advice, I'd probably do that. So Hashim, I love that you did that, but I just wanted to share my story because hopefully it resonates with folks as well.
Thank you, Tony. That's an awesome story.
I think that never goes away. Like even when you're just learning something, doing that is super valuable, but all your life, you can do that in all aspects of creating value for someone or in return, hopefully getting something that provides value to you that you need to learn more of or you want to be a part of. So I want to learn house flipping. So I reached out to my friend James Daynard and said, I want to flip a house with you. And so what I'm doing is I'm creating content for him that he can put on his social media, he can put onto his YouTube, all of the things that I'm learning. And that is of value to him because that is a pain point for him is creating content. So I'm doing that for him. In exchange, he's giving me, I'm 50% ownership and, you know, we're splitting the money on a property and I'm learning every little single thing that you can do during a house flip. So I think that value never goes away of trying to help somebody and figure out what they need too. Like Tony, you said that was great. He didn't ask for or even know that he probably needed the Facebook ads yet. And then you provided value.
So I just want to ask one question, actually, like, is there anyone that you're looking at right now that you're thinking about like, man, how can I provide value to this person? Like someone that you're kind of looking up to?
I guess, well, the most recent is James because we're doing our house flip right now. So I just got back last night from flying out to him to create content. So, you know, I'm spending money to fly out there, stay in hotels and, you know, film content with him. And then I invested into the deal too. But yeah, he's my most recent one, I guess.
Like for me, it's Grant Cardone. I've been like, you know, I've always been a fan of Grant, but like I've been watching a lot more of his interviews and stuff and just kind of his perspective on where he's trying to take Cardone Capital. And like a lot of what he's doing, I want to replicate in the short-term rental space. So if anyone knows what Grant Cardone's looking for, help me out so I can, I can start working with him too. So Hashim, thank you for letting us go on that tangent, man. But you know, I thought it might be of value to the listeners to kind of hear that story. So anyway, you kind of hit the ground running, networking on BiggerPockets. You're able to start building some relationships. So who was kind of that key person that allowed you to find that first deal? Did you find an agent and they gave you a deal? Was it a wholesaler? Like how did those relationships that you built lead to you getting that first out of state deal in Memphis, Tennessee?
So I quickly realized as I was going through that exercise that having, especially being out of state. So these places I was looking at, I have never been, and I don't really know the market that well. And I was learning as I was going. It was very apparent to me immediately, people on the ground, people that know the market, a team, you're going to need that, like instrumental to succeed or else there's no way on this. And I came across a gentleman by the name of Steven Akindona. And he has a business in the area, and essentially he's a one-stop shop, and he's a broker on one end, you know, if you want to buy or sell homes, but also on the other end, he has a general contracting and project management business. And I connected with him, and I remember we had a call, and, you know, our call was supposed to be 30 minutes. We ended up going over an hour. And I told him all what my goals were, what I'm looking to do in the market, you know, where I am in my journey, which is very beginning, but where I would like to go. And I shared with him what I've done in the past. And so in the past, I've been able to navigate different parts of the business and teach myself and learn and grow. And I've done different things within my industry. So I correlated that and said, although this is where I am, I can do it. And, you know, I shared with him what my goals were. And then in return, he shared with me what he's done in the past, where he is also, and value, you know, how he can help me get to my goal. And we clicked, and yeah, I started working with him, and for me, my mind is also process centric. And Ashley, I know you're big on that. Even during the rookie boot camp that we took, you were one of the sessions was just dedicated to processes. That's how my mind worked. And for me, it was more, do one proof of concept and then see how you can, if it works, see how you can scale. And within that, also like try to narrow and mitigate your risks as much as you can. We can't control everything. And at the end of the day, it's just anything in life is probabilities, right? But try to narrow, mitigate your risk and lower your risk as much as you can, and then go for it. And that was my first deal.
Hashim, what are some examples of ways that you mitigated your risk?
So that may go into a little bit into the, my approach to how I pick deals or how I select deals. Do you guys?
Yeah. Let's go into that. Sure.
Okay.
Yeah.
So what I do is I have maybe a 3 or 4 steps. And this is, again, me trying to create processes around things that I do. I have about 3 or 4 steps that I take when I'm looking at potential deals. And so we can go through that. So the first thing I do is, and this is like a pre-qual for any property I'm looking at, is really looking at the zip code and neighborhood. Do I want to own a property in this zip code or this neighborhood? That's the first thing I look at. And then I use Google Maps. I use Google Maps to look at street views and just see what's around it, right? Are there parks? Are there schools? Is there a Starbucks? Is there a Walmart? How does the house look streetwise? And then if, that gives me also an idea of the kind of tenants I'm going to be expecting, younger tenants, more family centric and so on and so forth. If it checks what I want, then I go into a 4-step thing. And the first thing I do is data gathering. And in that step, I want to understand what is the market value or the ARV for that property. What are comps around it? What's sold recently? What's not sold? What price range are they selling at? What are rents like? And that's really important because different markets can withhold and, absorb different rents. And then ultimately what the rehab is for that property. So I focus mostly on BRRRR, and that is a key data and key input to the whole BRRRR process, as you guys know. So, and what I do for that is I go online, I use, Zillow, Realtor, Redfin. These are all sites that I use to start getting, and this is all just rough data that you start gathering. And then I go to the rehab piece, and that is not a strength of mine, I will say. And I have so much more to learn on that front. But I've done a few where now I can take a guess, take a guesstimate. Okay, I need to do a bathroom. I need to do, kitchen, the roof. Okay, this is kind of what I'm looking at, ballpark. And then by then I know what their asking price is for the property. And then I just look at that and I can, you can quickly tell, okay, is it feeling like, yeah, it's going to work or no? And then from there, I actually go into my, now I have all that data, plug it into the calculator, and I use the BiggerPockets calculator. And then I also use an offline calculator. And then I see what the numbers look like. And if they all check the boxes, I get with my team, my mentor, I have them look over it, make sure I didn't miss anything. And if it's all good, then we actually go their team. And when I say them and their team, they go and physically walk the property and they see, fully assess it. And that means taking pictures, understanding what exactly we need to do, by different categories now, later down the road. And then what that estimated cost would be to bring it up to what we like to rehab it to. And there's reasons behind it, getting better rents, getting better tenants, better cash flow, so on and so forth. If all of that, and so I'll pause here. With all these steps, if you guys see, there's already redundancy in the steps. So I take a stab at it. I have my estimation. My team take a stab at it. They have their estimation and they go and physically walk it. And all of that is validating all these inputs and data that we have. And on top of all of that, one last thing that I do is what I call a desk appraisal. And when you're doing a BRRRR, the ARV and the rehab is so crucial to really making or breaking that deal for you. And, I use professionals to give me estimates on both of these. I do take a stab at it myself, but ultimately I use professionals. So the desk appraisal is literally using a licensed appraiser and providing them with your scope of work as to what you're going to do to the property. And they tell you what their opinion of the value of that property would be if you did what you said you were going to do on it. And if everything checks, then it's a deal and we move forward with it.
You know, Hashim, I can tell that you've got like an engineering background because you're so like methodical and systematic with your approach to investing. So I love that part, man. So first, thank you for sharing that framework, right? I think any new investor can copy those same steps and use that as a way to gain some confidence in their ability to look at deals and give them like the thumbs up or the thumbs down. Now, one piece I want to dig a little bit deeper on is the rehab estimation. I think most rookie investors that are listening to this podcast, they probably feel good with the first step of like checking out the neighborhood and, you know, how does it look and what do the schools look like? And, you know, are there, you know, jobs and things like that? They probably feel good about the sales comps as well, right? Like most people feel confident going into Zillow and saying, hey, this is a really nice house. What did it sell for? Right? Like most people can do that. I think where a lot of new investors get stuck is estimating the rehab costs. So, you know, you've done this now 7 times in the last year or so. So I'm sure you've kind of figured it out. But if you go back to Hashim on that very first deal, so deal number 1, how did you go about estimating those rehab costs, and were your estimates in line with what you actually ended up spending?
Tony, that very first rehab or first bird that I did, I had no idea where to even start with my estimates on the rehab, because that was my very first time doing it. And I'm looking at the pictures of the house. I'm looking at my assessment. And by then I didn't have all this process in place. I was doing these steps, but not exactly, it wasn't fully mapped out like I have it now. What I did though is I started Googling and, you know, going online and saying, hey, what bathroom remodel? What is that roughly? And obviously the data is not necessarily easily found, but I started just rough estimates together. But also at that time, I needed to lean on my team a lot more. They're the experts. I am not. And that is when, you know, I call my team, the gentleman I mentioned and his team, and I needed a lot of help, them helping, guiding me as to what that may look like. So I took a lot of inputs from them, and that was like also a way of me to start to learn, because after that, you know, offline, I went back to them and I was like, hey, help me understand. So each of these, how would you break it down? A 3-bedroom, 2-bath home, 13, 14, 1500 square foot. If these are the things we need to do on them in the future, help me understand how did we break it down? And then that started giving me some data points and some ideas, and I started noting that down. And every deal I went through, I would try to apply that. And I mean, to this day, I'm not 100% spot on. I'm still learning that aspect, but it helps. The more you do it, the more it helps, and the more you become better at it, like anything else.
Yeah, we're actually having, or if you guys haven't listened yet, if you go back to James Daynard's episodes, we did 2 of them, a Wednesday one and a Saturday one as a rookie reply. And he talks all about estimating rehab costs and construction costs. It is like a deep dive coming from expert. Tony, I know you know everything. Do you have those episode numbers?
165 and 166.
Yeah, I knew it. Yeah. But I loved how you talked about doing the breakdown. And you said you just wanted to understand what the cost would be for everything in case you went and got another property the same. And that's so valuable. So my asset manager, Daryl, he is working with a contractor where they gave us a quote for one apartment. And then a little bit later, we got a quote for a different apartment that was smaller, but the painting charge was higher. And so we went back to them. Well, he went back to them and said, hey, look at this huge difference. And we actually talked to the owner where the guy that was doing the estimating was just throwing out numbers and there was really like no math to it. So like going forward, it's okay, how much per square foot is it going to cost us in paint? So I think that's really valuable to understand exactly what you're getting charged for. Then you can kind of build out an estimate based on those prices each time you go and look at a property that needs to be rehabbed.
Absolutely.
I just want to talk really quickly about like my first experience rehabbing as well. So very similar to you, Hashim, I went out of state for my first rehab. And had no real sense of what it would cost to do that kind of work. But I found a contractor, and the first thing that I asked him, I was like, hey, here are the kind of houses that I'm looking at. Like I would just send him the Zillow listing and I'd say, here's kind of what I want it to look like, right? I'd send him a comp and I'd say, just like ballpark, like, what do you think this might cost, right? Like without you even walking it, but just like, give me like a ballpark number. Or he would send me a property they had recently renovated and I'd say, hey, what did that cost? Like, you know, what did you charge that person? And if you talk to enough contractors and they kind of give you those ballpark numbers, at least now you've got like a good rule of thumb to use. Now, when we started rehabbing in Joshua Tree, I had friends who were already flipping out here. And I said, hey, like, what's your price per square foot that you guys are typically seeing on your rehabs? And they were able to share some numbers with me as well. So asking the contractor for their most recent costs to other customers for comparable jobs, and then talking to other investors about what they're spending is another way to kind of give you a good ballpark.
That's a really good point, Tony. And that's one thing I'm starting to shift my mind more to. And the more I do, the more I'm learning is it boils down to a square foot. Even when I'm looking at deals now, you know, what's the price per square foot? You know, when I was just starting, I remember a year ago, 11 months ago, when I was just starting, it was, oh, how many bedroom, how many bath? It still is today, how many bedroom, how many bath, but also what's the square footage? What's the cost per square footage to rehab or to buy? So that's a good point.
Sorry, just really quick before we move on to the financing piece, Ash, I know you want to get that, but I just want to go back to the desk appraisal, the desk appraisal that you mentioned, because I think that might be a new concept for a lot of folks. I don't want to pass up on that. So first, Hashim, what is the benefit of a desk appraisal versus a traditional appraisal? And then what's the typical cost and kind of turnaround time on the desk appraisal?
Yeah, so for me in my process, the desk appraisal is really important because I want to be as certain as I can. Nothing's 100%, but I want to be as certain as I can in that ARV value, because that's really going to make or break the deal for me, especially with the kind of rehabs that we do. I mean, they're extensive and we're putting quite a bit of money into doing the rehabs. So to me, that is important. The benefit of that is it gives me more confidence, and I know, for certain that the deal would work out numbers wise. And then as far as, the difference between that and actual appraisal, the desk appraisal, as the name suggests, they don't actually need to physically go into the property. They can do it from their desk. And what they use is the scope of work. So I provide them with the scope of work. This is what we're going to do on the property. And then obviously they have information on the property based on their tools and online, where the property is located, square footage, so on and so forth. And then they factor in what we're going to do to the property. And what that gives them is what the end product would be. And so they can give an opinion on what that end product is valued at the current market. And, so that's what I do. And as far as pricing, it's, when you think about it, it depends on the appraiser, but roughly between $150 to $180 is what it costs. When I think about that in my business and process, $180 is so worth me knowing what I'm getting into, and also so worth me knowing what I'm expecting out of this deal and mitigating, talking about risk, like mitigating the risk a lot. So it's totally worth it for me, that $180.
Well, that's a great tip for anybody that is looking for that ARV, as to get a pretty close estimate as to what it's going to be. And I agree that $150 is well worth the opportunity cost of getting that information, instead of not having any idea and just winging it as to what the ARV could be. So thank you for that.
Yeah.
Before we move on to really digging into one of your deals, I just want to know, how are you financing all these properties? As a rookie investor, you can get 1-2 properties, and then it kind of gets to that point like, okay, well, how do I get the next deal? How do I pay for it? I just spent all my money. So how have you been able to grow and scale so quickly on the financing side?
So what I did for my financing, part of my analysis paralysis for years, Ashley, was around the amount of money, that it takes to actually get real estate going. I learned that I can leverage my assets in my stocks and brokerage account and get a line of credit on that. And then I can pull as much as I want, up to the limit, of course, and I can use that money to invest. And that is how I got started. So I called my brokerage, E-Trade is my brokerage, and I was able to leverage my stocks and assets in there and get a line of credit against that at a very, very decent interest rate, by the way. And So that's how I financed that very first deal. And that's how actually I financed all my deals so far. And then in tandem with that, obviously, is when you do the BRRRR, you're able to refi. So I'm able to, the money is not stuck or sitting. Obviously, some deals, so all my deals are at different stages right now. But what I'm expecting is for most of these deals, I'm able to pull back all my money. And some of them I'm actually able to pull out even more of what I put in it. So I'm able to go back and pay down that line of credit.
Let's talk about that line of credit, because I think that is one of the greatest tools that someone can use if they have it available. So if you have a non-retirement brokerage account with investments in it, you can have a bank put a line of credit. So those investments are acting as collateral for the loan. And since that is so liquid, pulling out your investments, that's more liquid to a bank than using your house as collateral, that you're willing to get way better terms, such as a really low interest rate on it. And then it does vary, doesn't it? So if your brokerage account dips or increases, doesn't the line of credit, the availability and the interest rate kind of change with that too? Hashim, is that correct?
It does. And I think every brokerage does it a little different, but yeah, so depending on what you have. So when I did it at the time, roughly, it was a rough math. They took about 50%. They could give you a line of credit up to 50%. I know some brokerages, and I know that changed since I did it, and some brokerages do it differently. So every stock or asset actually carry a different weight. So some stocks are able to give you up to 60, 70% of it. Some stocks only 50%, some stocks less than that. So it's weighted depending on the stock, how much they're able to give you against that. And then you're right, Ashley. When they give you a line of credit, depending on how, as you would imagine, that asset or the stock is going to fluctuate with the market. It's going to go up, it's going to go down. As that fluctuates, how much line of credit you have is going to shift as well. So you want to be mindful of that. Also, as you're using the line of credit, you don't want to exhaust it all the way and not have a way to pay back in case the markets go down and you need to pay some of it. One thing I want to add actually on the financing part, maybe before we shift gears, is where I am right now in my journey and the way I'm looking at this. So that's how I started, and I'm still leveraging line of credit mainly. But part of and actually, you remember when I took the rookie boot camp, one of the sessions was entirely dedicated to financing. And at that time, I literally had offers in 3 properties. If all those offers would have gone through, I had no idea like how I would have gone them. I remember we talked about it, and Tyler. So Tyler was my TA, and I remember we discussed that at Lend during one of the sessions. But now where I am is my mind is so much more open to other avenues of financing. The hard money, the private money. Different ways of being creative with your financing. And as I'm growing and expanding, my line of credit or the refinancing piece is not going to be enough. I need to do other things if I want to keep growing at this rate. So it's not a limiting factor. And that's where, having your mind open to other ways of financing, like the hard money, the private money, local banks, is crucial. And I'll encourage everybody to explore that option as well.
Hashim, you just hit on like a really important concept of maturing as a real estate investor. And I want to take a second to really drive that point home. When you first get started as an investor, there are so many things that seem scary to you, right? For most people, the idea of just submitting the offer is exceptionally scary. But once you start submitting offers, now you put offers out in your sleep. Right. But that first one, there was so much fear and anxiety and like nervousness around it. Right. But once you do more, you kind of get the hang of it. Your first rehab, right. You're probably tense and like checking in on the GC like every other day and like, hey, what's going on? How's this? How's that? And now, you got rehabs and maybe you're checking in once a week, maybe once every other week, and things are humming and going. Right. From the financing piece, I love what you said there about like, had all 3 of those deals hit at once, you probably would have panicked. Right. But the good thing is that every time you experience something new as a real estate investor, you're able to add one more tool to your tool belt, right? You're able to add one more skill to your skill set. And if you do that over and over and over again, you start expanding the world of opportunity that's available to you as a real estate investor. Because if you can take down one deal with hard money, another deal with private money, another deal with your line of credit, another deal with a JV, now you've got the ability to scale faster than other people do. So my point in all this is saying, for all of you that are listening, accept the fact that it's going to be scary at the beginning, but understand that the only way that you mature and the only way you get better is if you push through that fear and you find some creative solutions to keep going. So Hashim, you dropped the knowledge bomb there. I don't know if you realized it, but I have to go back and really drive that point home for you.
Thank you.
Cool. So Ash, anything else for you? Should we hit the deal review here?
Yeah, let's do you have a deal for us, Hashim, that we can go through?
Yeah, let's do my very first and scariest one.
Let's hear it. Okay, so we're just going to ask you a couple of brief questions real quick just to kind of set the stage for the deal review, and then we can kind of get into the story of it. Where was the property located?
In Memphis, Tennessee.
What strategy are you using for the property?
It was a burr.
How much did you purchase it for?
The purchase price was $100,000.
And how much did you put into the rehab?
The rehab was $45,000.
Okay. Do you want to start off with telling us how you got the deal and then kind of how the rehab went and then afterwards renting it and refinancing it?
Yes.
Okay.
So I got the deal from a wholesaler, and that was also like new for me, that world, working with wholesalers, exploring wholesalers. And actually that deal took, from the first time I saw it to the first time I purchased it, took about 2 months. And the reason for that is I was really hesitating and running the numbers like over and over and over before I pulled the trigger. And then the deal went off. So somebody got under contract. And then I was very bummed. And somehow it fell through contract and he came back and I pulled the trigger immediately on it. Anyways, I purchased it from a wholesaler, $100,000. And then I went through all the steps that I talked about as to how I select or make sure the deal meets my, it fits my criteria, what I'm looking for. It wasn't as clearly defined back then, but these were the framework that I went by. And then we went under contract, and then after that we closed, and then we started, with the rehab. Total rehab was $45,000, and it took about 2.5 to 3 months to do the rehab. It was extensive rehab. And then after that, with closing costs, so, closing costs, and then with refi. So actually, before we went to refi. So after that, so the deal was done in about 3 months, and by then I'm $145,000 into the deal. And then I went to the bank, and while I was looking to rent, I handed it over to a property management company at the time. And then I started on the refi because it was my first refi too. So I was learning it and trying to figure things out. I was able to find a lender that, and I'm not sure if all lenders do that, but essentially they were able to have me file and do everything ahead of time so that once that 6 month hit, the very first day of the 6 month, the funds are immediately released into my account. So that's pretty much what we did. And I was able, so you guys want to know what the ARV of that deal was?
Of course.
That's the best the big smile on your face is either really, really good or really, really bad. So I gotta know.
Luckily, it was good. So the desk appraisal came at, when we did the desk appraisal initially, it was for $271,000.
Wow.
And the actual appraisal came in at $281,000.
Oh, that's awesome! Congratulations.
Yeah. Thank you. So with that deal, I was able to get, I refi at 75% LTV, and I was able to get all my money back that I put in it, plus another $60,000. So I maximized what I can pull out of it. And then right now, as we speak, the house is rented, and it cash flows about $130 a month after expense. That is, and I want to touch on that because that is lower than what my goal is for cash flow and cash return, part of my criteria for the deals that I look for. But the reason it is that is because I was able to get an extra $60,000 out of that house. Mm-hmm. And I run different analysis. If I would have left that $60,000 and I just pulled back just what I put back into the house, the cash flow would have been in line with what my criteria is, which is about $300 to $400 per door.
I think that's so important. I'm so glad that you kind of broke that out as to why your cash flow is lower. And sometimes we get a lot of people on here, or even just you see it on social media, like this house is cash flowing $1,000 per month, but also you don't know how much money they put into the deal. So calculating your cash on cash return. So how much cash did you put into the deal, and then how much cash are you getting out of it, I think is really important to look at, and not just what that cash flow number is, because like you said, you pulled an extra $60,000 out of that property. So for you, it was worth it getting that $60,000 more than that extra couple hundred a month, going forward. And plus your tenants are paying down that 60,000, that extra 60,000 for you.
Yeah.
Yeah, I just had one question before we move on to our next segment here. But are you using a property management company for your tenants, or are you self-managing remotely?
So right now I'm self-managing, and I think every whether rookie or seasoned investor out there, I think listening, it is good in your journey to define really what you want, and whether you go with a property management company or you self-manage it yourself. I think there is value in being involved and at least learning it. And I know, Ashley, you started in property management, and you've shared that story multiple times. But I really like, when you share that story and different times you bring it up. I think it's really important for people, even if you outsource. And I don't think I'm going to be able to self-manage, especially my goals and where I want to go and growth. There is no way I'm going to be able to self-manage. And that's not what I want to do. I'm trying to build a business. And I want to, leverage processes and systems and outsource as much as I can so I can focus on what I want to do and what I enjoy. But for now, I'm doing it, and I like it because I'm learning it and I'm learning inside out. And I think it's much, much better for me to understand it by doing it and create processes around it so that when I'm ready to outsource, I know how to do it best. I know what to expect. I know how to pick the right property management company that fits my goals or my objectives, or where I'm trying to go.
Yeah, Hashim, man, I love your story. And even if you're only cash flowing like $10 per month, you still did that with no money into the deal, right? That is still an infinite return. You're still getting equity. Your equity is growing over time. So I don't think you need to, explain why you got this $130 per month in cash flow, because it's a great deal, man. So Hashim, I want to take us to our next segment, which is the rookie request line. So for all of you that are listening, you guys can reach us anytime at 888-5-ROOKIE to leave a voicemail, and we might use it on the next show. So Hashim, are you ready for today's question?
Let's do it.
Hi, my name is Kristen. I am from Maryland, and I had a question about growing a business exponentially with using the BRRRR method. Essentially, with the BRRRR method, it takes about 6 months before you can refinance and get your cash out to get onto your next project. In doing that, seems like the max amount of deals you could do per year would be 2. So what's the best way to kind of exponentially grow your business if you can only get limited to doing about 2 deals a year? Thanks so much for any answer you can provide. Thanks. Bye.
Great question. So the first thing I'll say is, and Tony and Ashley, I'll open it up. I mean, if you guys have anything else to add to it, but the first thing that's coming to my mind is you don't need to wait 6 months, which they call the seasoning period, to do a refi on your property. It's a different kind of refi though. So if you wait the 6 months and you have more equity into the property, you can maximize how much you can pull out of it. But if you do less than 6 months, you can pull out, and lenders may operate differently under this, but typically you should be able to pull out at least what you put into the property if you don't wait the seasoning or the 6 months period. That's my first thought on that. And then, I think scaling is really important. I touched on that as I was sharing my story. One thing that also jumps to me is different sources of funding. As Tony summarized it while I was sharing my story, it's good to have, maybe think about different ways, if possible, in your end of how you can get, funding, whether it's, hard money, private money lender, different banks, different types of loans, possibly. I would encourage you to explore that if you can. And then another thing that jumps at me is partnership. Perhaps, and I'm not sure, where you are in your journey or maybe what your ultimate goals are. But if partners are a possibility or things that, can fit into your goals or your business, maybe something to also, explore. People can have different things and strengths that they bring to the table. And sometimes it's money, it's funding. You may not have that, but you may have other things that you can bring to the table, and you can find a partner where you guys can complement each other and that would help you. It will help create a win-win, situation for both of you. That's kind of like my 3 thoughts and take on this. But Tony, Ashley.
Yeah, I think that was great. I definitely looking for other banks that will, do less than 6, that don't require a seasoning period. Looking at the commercial side of lending where there usually is no seasoning side at all. And then also just, I said, finding a partner. I that's how I got started, and I did pretty much all of my deals in the first 2 years was with partners. So I think that's definitely a huge advantage to be able to grow and scale that way. Okay, so now we're going to move on to our rookie exam. Here we go. Are you ready, Hashim?
Should I have studied for
yes,
this
you
before?
should have. This is graded.
Yeah, if you don't pass, we actually don't air your episode. So there's a lot hinging on this.
Okay, let's try.
One actionable thing rookies should do after listening to this episode.
I mean, I want to say just do it, and perhaps before doing it, just really sit down and write down that goal. Like, what do you want to do? If you're considering real estate investing, really write down what you want to do and have that goal drive you. So as Stephen Covey puts it in the 7 Habits of Highly Effective People, begin with the end in mind. And if you haven't done that yet, I would highly encourage sitting down, thinking about it, writing it down. And actually, I know you said actionable, but I think that is writing the goal down is action. I think it would drive a lot more, actions and things coming out of that.
I 100% agree, because you may think of something that you want or you want to do, and that isn't as impactful as actually taking the time to write it out, than even putting it somewhere where you see it every single day.
All right, Hashim, question number 2. What is one tool, software, app, or system that you use in your business?
Oh man, Ashley gave me so much during the Ashley and Tyler during the boot camp. I got so okay. I use Rent Ready and for property management, and I also use Rentometer to help me gauge what my rents are going to be, for a given property in a given market. I know you guys talk about Stessa as well. That's, another software. I haven't fully used it yet, but that's, also another software I'm looking at as I'm growing. So these are 3 different softwares.
Can I make a comment on Stessa really quickly? So, I always thought, like funny name, whatever, but I realized that Stessa is assets spelled backwards. So like I was logging in the other day and the logo did this like spin around thing. And I was like, holy crap, that's what Stessa means. So anyway, if anyone else was wondering where Stessa came from, it's assets spelled backwards.
I remember on Instagram, this is probably like a couple months ago, it almost like I feel like everybody that used Stessa like was posting about it. One person like realized it and everyone else was sharing it like, oh my God, I'm 30 years old and just realizing it's
Right.
or whatever,
Right.
Yeah, those are all
Never
great.
thought about that, Tony.
Yeah, those are all great
Well, now-
softwares to use. Go ahead, Hashim, were you going to say something else?
No, I was just gonna say I've never thought of it, but now I my mind wouldn't stop thinking of it that way whenever I see Stessa.
Okay. And then the last question is, where do you plan on being in 5 years?
The way I'm looking at it is I would like to be, my focus is mostly, the reason I do BRRRRs is because of cash flow ultimately. And I would like to be between $20,000 to $30,000 in cash flow in the next 3 to 5 years. And I've done some number crunching on the back end, and the number of doors needed to get there is a bit scary, but it's a goal I have for myself, and I'm working towards that.
That's awesome. Congratulations on that goal. And we're excited to follow
Thank you.
your journey to get that done.
Thank you, guys.
Well, Hashim, can you tell everybody where they can find out some more information about you and reach out to you?
Yeah, so I am not so active on social media, but you can find me on LinkedIn, and also using my searching by my name, Hashim Ismail. Also, you can reach me through my email, hashim@sirabucapital.com. That's where you can reach me via email. So these are like 2 ways that you can connect with me. And maybe before we wrap up, I do want to, give a shout out, a thank you to a few folks, if that's okay.
Yeah, sure. Of course.
Yeah. I'm going to start with Steven and Tyler. Thank you guys for all the coaching, mentoring, and help throughout. I've learned a lot from you guys. Definitely my family for not doubting me. My girlfriend for always being there and keeping me fed. I mean, there's days I'm like at my computer working so much and I forget to eat, but she's there. So thank you for that. And definitely the BiggerPockets community and you guys. I've learned a lot over the years through the podcast, the boot camp, books, forums and all. And my rookie bootcamp accountability group. Thank you guys. You guys rock. Yeah.
You forgot one. Well, you have to pull a Snoop Dogg and say, "I thank myself."
There you go.
I want to thank me.
I want to thank me. Well, Hashim, before we get out of here, one more person we want to highlight, and that's our rookie Rockstar for this week. So if you guys want to get highlighted on the show, get active in the Real Estate Rookie Facebook group, get active on the BiggerPockets forums, get active in my DMs and Ashley's DMs. We'll try and pull some folks from there. But today's rookie Rockstar is Robert Anthony Sr. And Robert shared some numbers from a recent flip. So they bought it at $185,000 using a hard money loan. The repairs and the interest payments only came out to $40,000. They listed it at $297,000, which is already a good spread, but they actually end up selling for $320,000. So this is a 6-figure flip. So Mr. Robert Anthony Sr., congratulations on an amazingly well done job.
Well, Hashim, thank you so much for joining us. And it was definitely a pleasure to have you in the boot camp and to have you on the podcast episode. So thank you so much for joining us.
Yep. Thank you, guys.
I'm Ashley at Wealth from Rentals, and he's Tony at Tony J. Robinson on Instagram. And if you guys are enjoying this podcast, please go to your favorite podcast platform and leave us a 5-star review and tell us what you love about the podcast. And don't forget to join the Real Estate Rookie Facebook group. We'll see you guys on Saturday.